Cool. Hi, everyone. Welcome to the Institutional Lending in DeFi panel hosted by Maple Finance. Thank you, everyone, of those of you who are tuning in right now and trickling in. Welcome. I'm Samantha Yap, the founder of Yap Global, a PR agency specializing in blockchain, crypto, and DeFi companies, and I'll be your host for today. Really excited to have this star panel with us. We have what I might go ahead and say who are the pioneers in the decentralized finance institutional lending space. So just to kick it off, we do have a fifth member joining us, so he might pop in later. But firstly, I'd like to introduce Balder Bomans, the Chief Investment Officer of Maven 11, a global blockchain and digital asset investment firm. Welcome, Balder. And then we have Mike van Rossum, the founder of Folkvang, a quant trading firm active in crypto markets, who's got an amazing view there in Hong Kong. And then we have Sidney Powell, the co-founder of Maple Finance, a decentralized institutional marketplace. And joining us, who might join us halfway, is Kelvin, the co-founder and partner of Spartan Group, a digital asset VC hedge fund and investment banking advisory firm. So we're gonna kick this off with setting the scene of DeFi institutional lending. And we're gonna start off with, first Sid kind of giving us an overview, and then it'll be really great to have the panelists share what role they play in the whole ecosystem, whether they're a borrower, a lender, or what you'll learn later at a pool delegate in the Maple ecosystem. But let's kick it off with Sid. I mean, Sid, how does institutional lending play a role in what's happening in the crypto economy today?
Yeah, good question, Sam. So I would say the role of institutional lending is really centered around the fact that we've started to see profitable crypto native companies emerge who are, they have found product market fit, they're profitable, they have strong balance sheets and cash flow positive. So what we've seen in the space are that this is largely market makers, market neutral funds. These are really part of the financial economy, and they're benefiting from the fabulous tailwinds of the space. But I would say also what we've started to see are additional industries that are benefiting from the crypto economy. These are probably more what you would call operating companies. So these are crypto miners. There are also node validators, and this is a very interesting new sector that's emerged within the crypto space. The role that institutional lending plays is that these companies need capital for growth, but they can't currently get it from the traditional lending space, which doesn't understand the business models and largely maligns the crypto sector. So this is where institutional lending within DeFi is evolving, so that these companies can be provided with the credit to reinvest in the expansion of their businesses. So I'd say that's really the core role that institutional lending plays, is really targeting capital towards these businesses so that they can expand.
Awesome, thank you very much for that, Sid. I mean, how about we go around? I mean, Balder, do you want to start off with the role that Maven 11 plays in this whole ecosystem?
Yeah, of course. Thank you, Sam. So we are Maven 11. Next to being invested into Maple Finance, we're also taking up the role of being a pool delegate. The pool delegate is essentially the party doing the majority of the DD due diligence and all the borrowers coming to the platform. So we are sourcing liquidity on the lending side, and also obviously sourcing that liquidity has a lot of explanation to do, as Sid just alluded to, right? I think a lot of people are still uncomfortable with running that risk, and so we are explaining these risk factors to all the different lenders. And I think that's very helpful in getting them onboarded into this crypto ecosystem and start providing capital towards all these amazing companies who have found these product market fits. And then on the borrower side, obviously that's a lot of legwork which we are doing there, which is almost a bank grade due diligence we're doing all over to all the different borrowers, balance sheet assessments, how profitable are they, how are they structured, what's their governance looking like. So there's a whole array of questions we're answering, and obviously we're taking this very seriously, as the quality and the DD is imperative for success of Maple and us as a pool delegate and the functioning of this financial system here.
Awesome. So yes, Balder from Maven 11 is a pool delegate. Now let's hear from Mike. Mike, what role does Folkvang play in this whole ecosystem?
Yeah, sure. So we have Folkvang. We are a trading firm, very active in the crypto markets, which really have exploded. Within the space, we operate as a market maker, as an arbitrageur, as well as a liquidity provider, more in the market sense of the word. And this is a space that has been exploding in size. And as such, it's a very capital intensive business. What we do, like if you want to be a market maker, even just on if you look at like a few exchanges or so, like most of them, they have hundreds of markets, hundreds of coins. So if you want to be like an active market maker there, you need a lot of capital to operate. It's very capital intensive. And we've been able to work with Maple, work with for example the pool from Balder over here, to be able to get access to some of that liquidity. And then the way we operate is we take these on as loans against some interest, which usually is set or it's market rate. And then we're able to utilize that within our trading software, which as Sid mentioned as well, like we think we are relatively safe in the way we operate, in the way we run all of our trading. And this way we just have access to more capital. And just to give some examples of the space of just on the centralized exchange side, which is actually only just a small part of the whole space. You also have DeFi and a few other parts of the crypto economy. There's $100 billion in volume on all the big exchanges, your Binance, your Huobi, your OKX, and such. And that's a lot of volume. And you can understand that you need a lot of capital in order to support all these people wanting to constantly trade. And that has like a kind of probably like maybe 20x or like a 10x since like a year, 2 years ago or so. So it exploded in size, and just the amount of capital required to keep it all going is really where Maple comes in for us. So we've been very it's been a great relationship for us so far.
Awesome. And so in addition to kind of the space that you're in, Mike, and in capital markets, where else in the industry is under-collateralized lending most needed? And how do you see borrower demand evolving in the future?
Yeah, sure. Yeah. So on the trading side, I think trading itself will also grow and take different shapes. Like, for example, a few months ago, we saw a very big boom in DeFi on the yield farming side, which are relatively new financial concept that you can't really translate them one-to-one from a concept or a primitive that you see in traditional markets. But these are big parts of the crypto ecosystem. These are basically like pools of money on blockchain, with big pools of money as well, with like a TVL usually in the billions of dollars. And to keep all of that going and to keep all the prices in line, like you need a lot of arbitrage and stuff. This is similar to the strategies that quant shops would perform, but a lot of it is pretty new. So we think there will be a boom there, and it will mostly be covered by the trading firms that we kind of know. But on top of that, I think they hinted at it a little bit as well. Like you see all kinds of different businesses. You got exchange businesses. This is still a little bit in the trading side, of course. You got I think at some point we will see other type of crypto native companies, like companies that are just fully that operate completely on chain. And as soon as they move a lot of their finances and such on chain as well, I think it will become a lot easier and doable to kind of do a lot of DD and a lot of to prove their cash flow and to prove a lot of that. We will see that, but I think it's kind of like a new kind of unexplored territory. So I don't have that many like good examples as of yet.
Well, I'm wondering, Sid, do you want to add to that? Because obviously you're talking to a lot of businesses, protocols that do need to borrow money. So yeah, where are you seeing demand from?
So I'd say outside of the outside of the established market makers, market neutral funds, the next other spaces that we're seeing interest from are, of course, proof of work miners, and there's a huge tailwind behind this as a number of these miners are returning from exiting China and returning to the United States. So I think there's a huge demand for capital coming in that sector. And then the other one, which is quite interesting and an emerging business model, is node validators. So you can think of networks and protocols like, say, for example, Chainlink, where you could have Oracle providers where there's an upfront cost of capital, and then there's an ongoing expenditure, to maintain their SLAs, like being always on, for example, close to 100% uptime. So these require capital investment for the initial infrastructure and for the ongoing expenses. And I would say this is a business model that's poorly understood outside of crypto native lending. And so this is just one of the areas that we expect to grow over the future. And of course, everybody also is aware of the growth of DAOs this year. So I would say DAOs are another potential borrowing entity through the DeFi lending space pretty soon. You have a number of DAOs, particularly on the DEX side and the perpetual swap side, who are earning consistent recurring revenues so they can service debt. And then they also have relatively large balance sheets from their own token holdings, so they can provide backstop collateral should that be required.
Awesome. So
additionally, additionally, I think that last one is a very interesting one, right? So I think we are seeing protocols and applications out there with big treasuries, and it's before the way of financing was selling off some of your treasury, and I think now we're getting ways to be more efficient with that balance sheet, right? So it's all about cost of capital. So if you were selling off some of your treasury at a 30 to 40% discount, is that an optimal? Well, you could also start thinking about taking a loan at Maple Finance, holding on to that treasury as you expect a lot of growth for your company, and as such you start to see some balance sheet optimization for these type of companies. And I think we're getting to that stage now where Maple Finance could be a great product market fit to these type of companies.
Awesome. So we really have touched on how there is a growing demand for borrowers, and Maven 11 has seen this potential. I mean, Boulder, what makes DeFi lending protocols like Maple Finance an interesting alternative source of yield compared to centralized crypto lenders, so to say?
Yeah, for me that boils down mainly to two things, I would say. I think the overall returns, and secondly the transparency. I think if you look at the return base, I think across the board we are seeing very good returns in DeFi over the, let's say, the past 12 to 18 months, and specifically also Maple in this case. Especially when markets start to heat up, the DeFi degens are known for taking up some loans, and then we see rates starting to move up, and I think we're already starting to see that right now as of the last 2 weeks. And the second thing is maybe even more important is the transparency, right? So if I'm a lender on Maple, I know exactly, obviously you can come to us to get an understanding of how we do our DD. But you also see exactly who are the borrowers on our platform, what kind of rates are they receiving currently, and what kind of companies are behind them. So there's a lot of transparency about these companies we're borrowing to. Their reputation is obviously on the line. And if I compare that to a centralized lender, then you are lending out to a company where you do not know who are the ones taking up the loan on the other end of the tail. So I think that transparency is extremely key, and that's obviously what DeFi is for a big thing, or blockchain as a whole is about. And that's what we're trying to offer here, to make people comfortable through that transparency is extremely key in my opinion.
To quickly actually add on to that, so we as a borrower, we value we want to borrow a lot. We need to build up a credit history for that. So besides the DD where someone looks at our financials and makes some decision about how trustworthy we are, we also want to build up a good credit history, and to show to a lender, but also to the whole world, it's even better that we have consistently borrowed, we have consistently paid back over time, and Maple is a great way of doing that. Because everything is tracked and viewable on the blockchain. We are actually in conversation with some with other lenders as well that are a little bit more private, and we can say, well, you can just look at our activity on Maple, and you can kind of see that we are we actually have paid interest back on time. We are paying back. It's because unlike traditional finance, you don't really have like very big credit networks or government stepping in and setting up all kinds of credit scores among different either individuals or companies or anything like that. So for us, that's really great. Like we love to be able to show people that, like, listen, guys, we borrow Maple, and we have been paying back, and there's proof of that on the blockchain, which is undisputable, so to say.
I think this is a great point, right? So we are sort of replacing rating agencies already, sort of by doing this, by making it completely transparent, and obviously Mike will also take out another loan and another lender if he gets the right rates. But I think that's what's extremely important here, and I think it's all gonna be transparent in the end, and that's good for both sides. So it allows us to way better start to monitor the risk if everything will be on chain, so we know exactly what Mike is doing. We can monitor the risk, and for him as on the borrower side, I think that will eventually start to push rates down, because we are way better to assess and monitor risk down the line, because he doesn't have any transparency in his balance sheet. We're going to be able to provide lower rate loans to Mike, because we know that what his risk curve is. So it's going to be working on both sides. It's good for us to monitor, and it's going to be good for Mike, as he's going to get access to cheaper capital down the line.
Right, and so yeah, basically the main points you guys are making is transparency is one of the selling points for using something like Maple. Sid, do you want to touch on what are the problems decentralized finance lending protocols like yours solves for these borrowers and lenders?
I think we've touched on the under-collateralization aspect already, which is the fact that other protocols within the space, particularly if you look at where lending in DeFi began with Compound and Aave, those are over collateralized loans, and it's not really conducive to credit, to the expansion of your business to have to put down $150 of collateral to borrow $100 to expand. So that's the first element. We're allowing these companies that have now built up stable operations and strong balance sheets to leverage that and really to build upon that with actual credit creation. So that's the first element. But then the second is that there is trust in the protocol, because you can see exactly where the assets are deployed. So there is not rehypothecation occurring. So borrowers who do supply collateral don't have to worry about that. And then one of the other elements is that we don't do automated collateral liquidations on Maple. So for borrowers, they really have that benefit of an OTC style relationship where they can speak to the pool delegate, they can build that relationship so that if there is volatility in the markets for the underlying assets, they do not have to worry about collateral liquidations there. It's only if they were to default by missing interest payments where a liquidation would occur. And so we think that's we think that's a step towards the needs of institutional borrowers within the space.
Well, moving on to risk management, Mike, particularly credit risk and how that's important. What innovations are we seeing in decentralized finance risk management, and how does a lending protocol like Maple play into that?
Yeah, so there are actually there are quite a few developments that we are seeing. So especially the trading that's moving on chain. I've already seen a few protocols and a few kind of teams trying to build out, credit monitoring solutions on chain. We're seeing similar stuff on the centralized side as well, where parties, take up some kind of almost like a fund admin type role, where they, go over the balance sheet and try to record that in real time. We're seeing a lot of stuff there. I think that will continue to grow. I think those are the top things that come to mind for me.
Cool. Balder, did you want to touch on that as well, on risk management?
Yeah, of course. That's what we're here for, right? I think it all started obviously with the coming to life of liquidity pools. We were able to get loans obviously from the big liquidity pools out there, and now we're starting to venture into under-collateralized lending, unsecured lending. I think a lot of stuff is still in the cooking, But I think an innovation I really appreciate, and I think that's good as a whole, is that we, as a pool delegate, we have staked quite a sizable amount onto our pool, and that it's also open for other people to stake their NPL tokens. I think we currently have a first line of default of around 2 million, just a little bit more. And I think that's sort of a nice, very nice mitigation for lenders onto our platform. So I think that's an innovation where we, as a pool delegate, but also other parties, okay, we want to have part of that income stream from these transactions taking place on the Maven 11 pool. But we're also going to be that first line of default when things go sour. So I think then people obviously want to understand our DD processes. So please reach out if you have an interest in Maple staking and want to know how we do our DD. And secondly, I think the big innovation, which we already alluded to earlier, is the transparency, right? So making it on chain is, I think, a big innovation, allowing for more efficient capital markets and capital allocation. And the last innovation, maybe it's not really innovation, but it's more a copy of what we're seeing in TradFi by offering the first fixed tenor loans. I think people and companies are way better able to build their company, right? I mean, variable rates is very hard if you want to build a company, hire people, make budgets, and make sure that these rates are fixed for a certain period of time. Allows people to have a lot of clarity on their cost and on their balance sheets.
Yeah, I think just to add to that, so you've got the structural elements that Boulder talked about, which would be the tranching, where we have, that staking reserve, which is available effectively as first loss capital to wear defaults if there are any within a particular pool. And I think the other elements are the diversification within a pool. So if you're a lender coming into that pool, you're not exposed to a single borrower. You're instead taking the pooled risk of defaults across numerous borrowers. At the moment, we've got about 15 or 16 borrowers across Maple. Over time, we expect this level of diversification to continue to grow, and each pool, it should be noted, could pursue a separate strategy. So you could have a low-risk pool focused on, billion-dollar-plus organizations. You could have a pool that's focused on a particular industry with very stable cash flows, for example. So those are a couple of structural and and practical lending elements through which risk is managed.
Awesome. I think we've touched a lot in detail about, the need for, borrowing in this space, especially in the, crypto economy. It'll be great to hear from you guys, and speaking mainly to the participants and those on the call right now who are actually not in crypto currently. Would you all kind of go around and kind of make the case of why they should potentially care about what's happening in crypto lending and why, and then we can touch on kind of where we're heading today with it.
I'll kick that one off. You want to go, Mike?
No, go for it. Take it.
Okay, perfect. No, I think it's crystal clear that the institutional demand for crypto as a whole has been extremely interesting to watch from at least our position, how that has evolved over time. I think for the last 12 to 18 months, there's a huge amount of interest. I think it's also interesting to see that the parties we're currently talking to about crypto, blockchain technology as a whole are way better informed than they've been ever before, at least in our conversations, right? In the earlier days, they weren't really informed, and I think they now come to the table and they already understand what's DeFi, what are the basic concepts, what is it bringing, what does it mean that we're bringing transactions on chain. So them being way better informed is very helpful, and I think the overall impact it should have on the sector is that if we start to attract deeper pools of liquidity and bigger pools of liquidity, and we get that liquidity to the crypto ecosystem, that will be beneficial for the crypto ecosystem as a whole today, and also for new entrants. I think it will allow for a way better pricing, more efficient markets, and a lot of these products today are built around liquidity. So having that liquidity, I think, is key and crucial to building your product and service. So I think we should definitely be welcoming that liquidity, and we obviously spend a lot of time and effort getting these people across and getting these people onto platforms like Maple today.
Yeah. So to add on that, I think this year we've seen really a growth in the whole ecosystem, in the whole crypto space, and how how it's been perceived internationally, by the traditional finance community as well. If you look at the listing of Coinbase on the stock exchange, like at a pretty high valuation. If you look at some also private valuations of other companies in the space, like crypto it has arrived on the institutional side as well. There's lots of opportunities for even for hedge funds, such everyone's kind of dipping their toes in. As Balder is saying, like people they've been reading about it, they understand what's happening, they're seeing what's happening, and with the sheer amount of opportunity that we see in crypto right now, I think it's drawing in a lot of people. And whereas a few years ago everyone's kind of, oh, this is kind of like a fringe market, it's very high risk. Like nobody really understands what the risks are in terms of the blockchain security, all that kind of stuff. And I think we kind of like progressed beyond that point now, where everyone's like, well, crypto is now being taken seriously, but by all different kinds of financial players. So I think it's just a matter of time before that gets even worse, where we see the big banks offering custody solutions, offering products to their big clients as well. And I think like that's a trend that has slowly started, and I think there's a kind of like no stopping it. So I think we will just see a whole lot more of that going forward.
Sid?
I would say within the space, what we're going to see is more interest from outside crypto drawn to lending as a source of yield within the space. So I think DeFi really kicked off, and yield farming was certainly a really big phenomenon over the last 12 months. But now we're starting to see more sustainable sources of yield emerge, and credit markets are probably one of the prime places that people would typically look for this, who are looking for capital preservation and a steady source of income. So I think you're only going to continue to see more appetite, from outside crypto starting to pay attention to the space. And I would say, Boulder highlighted before, but we're seeing supporting products like credit scores starting to emerge. So there are just within the on-chain space, you have X Margin, Spectral, Teller, all doing great work, along with ArcX and the DeFi Passport. So I think all of these are elements that are adding to an ecosystem which support the growth of lending in the crypto markets.
Mm-hmm. Cool. Thank you guys for making that case. I'm going to actually throw to this question that came through in the Q&A section about your views on the extent of regulatory compliance or lack of relating to the AML and KYC requirements in DeFi. And as you guys make the case for it, what are your views on that? What can you say? And this question came from Jeff. So thank you, Jeff. Who wants to take that?
Yeah,
I think
sorry, go on.
You go, Mike.
Okay, yeah. I think no, this is a very interesting question, and I think it can kind of go both ways. I think we have seen a few pools, for example, from Aave, where they had they placed limits on who is allowed to participate. So they have some kind of a KYC whitelisting process in place. There are some experiments being done on that side, but then on the other side, I think we are also seeing with blockchain that it is a new way of thinking. Just like we had with the internet back in the day, where everyone was allowed to access the internet and everyone was allowed to kind of talk to each other. That was kind of new, and that was scary for regulators and scary for different governments to kind of like, how do we control this? I think it's still not clear how that's going to go and how that's going to play out. But I think if you look at just on the innovation front, like if you look at the value add from all these DeFi protocols, being built on top of each other, I think it's quite clear that like there's so much upside that we just kind of have to see how we're gonna work around that, so to say.
Sid, did you want to add to that?
No, I was actually going to say Boulder would also be perfect to pick up a couple of the last parts of that question, because I was talking about what they look for when investing, whether it's smart contract audits or dispute resolution mechanisms.
Yeah, so that last one we haven't heard a lot of questions about by the institutional investors we are currently speaking to. I mean, I think it's crystal clear that what we've earlier said, there's so much demand for people to get exposure to the crypto ecosystem, either via buying crypto, but especially also like solutions like Maple Finance. And for them to be a lender today in Aave in most cases is completely impossible from a KYC AML standpoint. Obviously, there's a lot of software which takes away a lot of that burden and pain today. But it's just for them, from dependent on where the jurisdiction is, not enough today. So I think the fact that we have a full KYC and we know all the borrowers is very beneficial to them. So it's KYC, AML is key for these parties to come in, and I think that's what we are offering obviously with Maple Finance. Then secondly, on the insurance, that has been a big discussion. I think generally people are definitely not comfortable with the smart contract risk today, especially when obviously we see in the FT and the Bloomberg that Poly Network got lost 600 million. I think these kind of instances does not instill a lot of trust, right? So I think we definitely need to make sure that insurance for these parties is there, that they can sleep comfortably at night with the smart contract risk. And then the last one, which is just said, right? We do not have a lot of questions about disputes today, but they will probably come in the near future.
Actually, there's a follow-up question to that, and it's actually directed at Balder, but I actually think Sid could also take this. So it reads, very interesting that you've mentioned transparency. I've been wanting to ask, how does Maple make the actual lending process and decision-making more transparent? He says, we as LPs can see the loans, but not much as to why the pool delegate has lended to the particular borrower.
Yeah, that's a very good question. Actually, it's obviously today it's a lot of hand and skill work, right? So someone who's assisting us in this process is an European banker with a very extensive credit background. So he's done credit research and credit analysis for most of his life. So that's a certain skill and expertise we would like to have on a team to obviously reduce the risk for ourselves as a pool delegate, but also reduce the risk for lenders across the board. So that's very, very much needed. But I do think that in the near future we'll start thinking of entering into ways into making that decision-making process a lot more transparent. And I think that's also maybe to Mike, if Mike is comfortable sharing more of his information in a public, transparent way about his company, that will allow us to share that information and make the decision-making process more transparent, even more transparent. And maybe we can even have, I don't think we should have a vote on it. It should probably be still our call as we are taking most of the risk, but I definitely like to make it more transparent down the line. So people are starting to understand the process and also start to see the difference between the different borrowers and the rates across the board.
I'm gonna express a view on that. So I think, the pool delegate providing what they look for and the kind of framework, I think is fine, but I don't think any commercial borrowers are going to want to subject their financials to the whole world. You wouldn't expect when you go to get a loan that you need to share your financials with everyone. You trust that prudent underwriting and due diligence is being conducted, and as long as the pool delegate is sharing the framework and the way in which they operate, I don't think they need to share every borrower's particulars. And what I would say is also that most lenders, typically they want to yield. They don't want to conduct all the due diligence themselves, and that's why you have the function of an underwriter here. Because it's actually solving a problem and providing a convenient service to lenders. So I would say, that there's potentially tools like zero knowledge proofs in the future, but I don't think commercially that it would be sort of within appetite of most commercial borrowers.
No.
Yeah, just as a borrower to chip in there. Yeah, for us, it's especially on the trading side. If you look at trading firms, most of them it's a very competitive space. We have a lot of competition, so we really have to be careful about the information that we share. We can obviously share more with the pool delegate, on the base of trust there. But yeah, we would not like it if they would share that with the whole world for the sake of transparency. I think there would probably not be much borrowers interested after that still. It's always, we need to kind of find a right mix. Like it's about making everyone comfortable, including the pool delegates, the LPs, and everyone else that's supposedly that's interested in the credit kind of score and such like that. It's about finding a mix. Like we would not be too comfortable if we had to divulge too much about our balance sheet. So yeah, it's about finding the mix, the right balance.
Yeah.
No,
There's
so
actually
I think the transparency should be about around the framework, right? It's a little bit the same. I think if you're exposed to a private debt fund and you're an LP in the debt fund, you want to know the way they work, how they operate, what they look at, and how they do the DD. And like I said before, that's an open invitation to come chat with us and understand our framework. But I think that's how far this goes for this stage, yeah, indeed.
Right. There's actually a really good follow-up question on this. The question reads, how big of a risk do anonymous teams present as borrowers to institutional lenders, given the fact that most of DeFi protocol teams are anonymous?
I would say, yeah, I would say we're probably a ways away from fully anonymous teams borrowing. I think it, the way that under-collateralized lending is set up, it's really conducive to KYC of the borrowers occurring. And I would say that whilst there is a mix of anonymous teams and non-anonymous teams, in terms of most of the protocols that have delivered sort of product market fit and actually are generating their own fees to date, a lot of these, it's probably skews more heavily towards, known teams, I would say. So I would say the first borrowers who, the first DAOs that are likely to be successful borrowers are probably, likely to be from the known variety.
Right. So we're still.
Yeah, so additionally, I think that's. I think obviously there is a lot of anonymity and pseudonymity, however you want to call it, right? So, and I think that's definitely what DeFi stands for. At the same time, I do think that the majority of DeFi is still known or has a track record or has an identity. But yeah, that's getting more skewed towards the anonymous side. I think it's a little bit early to start lending out there, but. I think further down in the future, we probably find ways to make that happen and still trust in a different way. But let's see.
Mm-hmm.
Yeah, I think we might see some stuff there, especially on the DAO side, where DAO is usually like the place. It's a decentralized group of people where like the LPs have voting rights, usually using some kind of token. So that's like you're not really dealing with like a fixed amount of people that are always public and have their names attached to it. So but in that situation, like a DAO, everything's on chain. So for the like a lot of the DD and a lot of like the treasury and such, that's all on chain, and that can even on the collateralized level, like a lot can be done there. On the under-collateralized level, it's all about that community, right? And all that, because the community is run according to a set of rules, which is enforced by the blockchain. So I think we will see some stuff there, and I think definitely via Maple as well. But it is early days there. It's tricky.
Okay, so we're early days on anonymous teams, and maybe more established DAOs will be the next participants. Now, there's a question that came through from Samuel Colt asking for those in the middle. Most of Maple's borrowers are well-known, established firms, which makes sense, but could a lesser-known firm build its credit score on Maple and start with smaller loans? This is Samuel.
I think,
comes from
yeah,
Samuel.
I think I think lesser known operations could certainly do that, but they would still need to meet the kind of the credit criteria, which would be, looking for a proven history of being able to generate profits, compared with some of the existing market makers today. Are they market neutral? And what is their overall level of leverage on their balance sheet? It's the same kind of credit criteria that would apply to any borrower. It's not purely, it's not really based on reputation. It's based on the sound sort of credit fundamentals of the business.
Yeah, that's crystal clear, right? So I think in the end, this is what Maple is designed for, to start servicing these type of borrowers, right? People who do not have the capital to deploy into another pool and get a US dollar loan. So to make it more efficient, I think this is the type of borrowers we essentially going to be servicing. But yeah, they need to live up to the same credit standards as we're currently having with the borrowers on the platform. That's crystal clear.
Mm-hmm. Awesome. Well, I mean, to come back to kind of where we are right now and where we're going to head, congratulations to Maple. They reached 100 million in a 100 million milestone in the lending pool. Where are we at now? Where are we heading? Maybe Sid, you want to touch on kind of yeah, what you hope to see in the coming months, and then I guess Balder and Mike can jump into.
Yeah, so I think we hope to see continued growth. We recently crossed the 100 million milestone, so I think we were sitting at about 118 million in deposits made to the platform since we launched in May. We continue to accept new borrowers and lenders onto the platform. You know, over the last 24 hours, what we've actually done to make it more appealing to lenders is we've reduced the lockup that was in place on funds from 180 days down to 90 to meet the growing demand that we're seeing for participation. And if you are interested in getting started with Maple, you're able to email contact@maple.finance, and Maple's customer success team would be in touch to schedule a call with you.
I think on the borrowing side, the markets have been, I think Balder touched upon this earlier a little bit as well, with the rates going back up in the last few weeks. The markets are running really hot again. Like we really had a boom earlier in the year. It was a little bit quiet after that, and prices came down a little bit in May. But things are really picking up again. And so on the borrower perspective, I'm only speaking for me, but I think I can speak for many other borrowers, is that we are still very, very capital hungry. We are ready to take on more loans. So I think, you know, with the interest that we're seeing right now in DeFi, like the only thing that could happen here is that the numbers, you know, like this 100 million milestone will be, you know, like it will go higher. We'll be talking about $200 million milestone really, really soon, I think. Especially with the way things are in the market right now, there's a lot of momentum. Yeah, we think that we'll keep on going for a while.
That will need some more ambition, Mike. So let's make that $500 million milestone right soon.
Exactly.
But I think
yeah.
there's a lot of demand on the borrowing side, right? Especially, I think the unsecured lending is extremely interesting for a lot of parties, not only the market makers, but also the ones we've discussed over this call. So yeah, we continue to invite lenders to come to the platform. I think the current APY on Maple is extremely juicy. We're north of 40%. You've got a great insight on diversification. I think that's key here, right? So we're diversified over various parties in our pools. And secondly, you have a first loss of default. So I think that's what we are securing here. So we're looking forward to build the pools and building decentralized credit markets for the crypto ecosystem, and being assisting in companies in building their own company and having security on their balance sheet and on the cost. I think that's what we're here for, and that's what we're going to be aiming to do.
Awesome. I think that's a great place to wrap.
Yeah, yeah, it's great to hear that you've got hungry borrowers here, and an encouragement for those who are just looking into this space as well, the need for more lenders in this space. So yeah, I guess we can wrap up here. If there's any other closing points that you had, Sid, please do jump in. But thank you everyone for tuning in to this panel. Thank you, Balder, and thank you, Mike, for joining. And yeah, look forward to see where we go. Let's see how soon we can get to $500 million.
Thanks everyone for attending.
Perfect. Thank you, Samantha.
You guys.
Great. Thank you.
Bye.
Cheers. Bye-bye.